All right, welcome back to Talk Tickers, the show that helps you cut through the noise and understand what really matters in those company earnings calls. And today we're diving deep, going in depth on Marvell Technology, specifically their Q4, their fourth quarter for fiscal year 2025.
Yeah, so right off the bat, what really jumps out is that Marvell announced record revenue.
That's a big one.
Yeah, $1.817 billion. And they not only hit, but exceeded. They went past their own forecasts with that. And that's significant growth, both compared to last quarter, Q3, and the same period a year ago.
Yeah, that's a pretty solid headline number to start with. And it seems like it's being driven by one area in particular, right?
For sure. The data center sector is really the main engine here. And it's all fueled by that seemingly unstoppable demand for AI infrastructure.
Yeah, everybody's jumping on that AI bandwagon.
And another key thing for their bottom line, for their profitability, Marvell hit GAAP profitability in Q4.
That's a big milestone.
It is, yeah.
Yeah.
And importantly, they expect this to continue. This isn't just a one-off thing.
That's great for investors to see, consistent profitability. And it wasn't just on paper either, right? The actual earnings were strong as well.
Exactly, yeah. Their non-GAAP earnings per share also set a record, a new high. And this shows they're achieving what's called substantial operating leverage, basically meaning they're turning that increased revenue, those higher sales, effectively into higher profits.
So they're scaling efficiently, more money and leading to more money, more profit.
Right, exactly. And taking a step back to look at the full fiscal year 2025, Marvell saw really strong overall revenue growth again, with the data center segment leading the pack. And they actually they went above their initial AI revenue target that they had set at the beginning of the year.
So exceeding expectations all around. This got to make investors pretty happy. So a strong past, and it sounds like a pretty bright future as well.
That's the sense I get, yeah. They're expecting strong year-over-year revenue growth for the coming fiscal year, so they seem very confident in that continued momentum.
All right, so let's unpack that a little bit. What made this, this past quarter so strong? What's really driving that data center performance?
Well, it's really a combination of factors all sort of coming together at the right time. They hit record revenue within their data center segment specifically, and this was driven, it seems, by two main things. The first is that they've successfully scaled up their custom AI silicon programs, which is basically, think of it as tailor-made chips for very specific AI applications.
So very specialized, going after a particular niche.
Exactly. And the second thing driving that data center revenue is that they had really strong shipments of their Electro-optics and Ethernet switches.
Now, for those of us who aren't necessarily fluent in the language of silicon, can you break down electro-optics a little bit? I mean, I know it's something to do with moving data with light, but...
Yeah, sure, yeah. So at a basic level, electro-optics is all about using light to transmit huge amounts of data. And this is absolutely critical in these, high-performance computing environments like data centers. Because with traditional copper wires, electrical signals, you hit a limit in terms of speed and how far you can send the data before it degrades. But with light, with optical signals, you can go much faster and much farther.
So it's all about pushing the limits of speed and distance.
Yeah, and Marvell saw continued strong demand for their 800 gig PM and their 400 ZR DCI electro-optics products. These are key components. They're the backbone for connecting different parts of a data center. What's also interesting is they started shipping the industry's very first 1.6T PMN DSP.
So double the data capacity.
Effectively, yeah. Think of it as, essentially doubling the amount of data you can carry compared to the previous generation.
That's a pretty big leap forward.
It is, and they're not stopping there. They've already announced a 3-nanometer version of that 1.6T DSP. Now, when you hear people talking about nanometers in chip design, smaller is generally better.
Yeah, it's like with those iPhones. You want the smaller nanometer chip.
Right, because it means you can fit more transistors into the same space, which leads to better performance and often lower power consumption. And this new 3-nanometer chip does just that, boasts reduced power consumption. They expect it to enter production in the second half of this year, which kind of aligns with the broader industry adoption of that 1.6T technology.
So they're keeping pace with the cutting edge. And power consumption is a big deal in these data centers, right? It's not just speed, it's efficiency as well.
Absolutely. And they made a really interesting point during the call. There's a lot of focus on the raw processing power in AI, like the GPUs, the XPUs. But what they emphasized is that the underlying connectivity, how you move data between those powerful processors, that's just as crucial. Because if you can't move the data quickly and efficiently, the whole system gets bottlenecked. And this is where Marvell's expertise in high-speed networking comes in.
Yeah, you need to have all the pieces working together. So it's not just about providing like standard off-the-shelf components anymore, is it? It seems like there's a big trend towards customization in the data center world.
Oh, absolutely. Just like cloud providers are now tailoring their software and even their compute silicon, their CPUs, their GPUs, they're also looking to customize their networking infrastructure to really optimize performance and efficiency. And Marvell is seeing a lot of traction, a lot of interest in their custom networking solutions. This includes multiple custom NICs, which are network interface cards. They basically connect servers to the network. And they even mentioned a follow-on custom CXL memory solution with a couple of these big hyperscale players.
Now, CXL, Compute Express Link, for people who don't know, it's a newer standard that allows for much more efficient sharing of resources like memory between different processors and devices. So they're not just providing like individual building blocks anymore, they're helping design custom architectures from the ground up.
Right. It's becoming much more integrated. And they're also involved in enabling these new interconnect technologies like CPO, which stands for co-packaged optics, and LPO, linear pluggable optics. And these are specifically designed for these massive AI deployments that we're seeing.
Now, co-packaged optics, that's a pretty interesting one. That's where you're actually integrating those optical components, for light-based communication, directly onto the same package as the main processing chip. And I think that's really exciting because it promises even faster, more efficient communication with even shorter data paths.
That's the idea, yeah. It's all about minimizing those bottlenecks, getting the data where it needs to go as quickly as possible. And they've made significant progress in developing co-packaged optics for custom XPUs specifically. And they said they have trial systems under development as we speak. So this move from copper, traditional electrical connections to optical light-based connections right within the chip package itself, that's a big potential growth area for Marvell going forward.
So lots of exciting developments there in the data center world driven by AI and this big push towards customization. So let's dive a little deeper into those custom silicon programs specifically, because it seems like that's where Marvell really has a competitive edge.
Yeah, no doubt. They highlighted how successful they've been in ramping up some incredibly complex XPUs and CPUs into high volume production. We're talking chips with over 100 billion transistors. That's just mind-boggling.
Yeah, it's hard to even fathom how many transistors are on those chips.
And what's particularly impressive is that they achieved this with first-pass silicon. So in the chip world, when you're designing something this complex, it's very rare to get it right on the first try. But when you do, that's a huge win, both in terms of time and money saved.
Yeah, it's like hitting a hole in one in golf.
Yeah.
Doesn't happen very often.
Right, exactly. And this really speaks to their expertise in design and manufacturing. And it seems like the momentum in their custom business overall is only growing. More and more customers are recognizing that they need these tailor-made silicon solutions to handle the really demanding workloads of AI and other advanced applications. And they specifically called out 2 leading AI custom programs that are now in full-scale production. One is a custom ARM-based CPU, and the other is a custom AI XPU. So these are really purpose-built chips designed for very specific tasks.
And they anticipate that this custom business will continue to be a big growth driver for them in the future.
Oh, absolutely. They expect to see continued revenue growth from those custom XPUs, not just in the current fiscal year, 2026, but also extending into the next year, fiscal year 2027. And what's got them really excited is that they've made a lot of progress with a brand new custom AI XPU design win with yet another major U.S. hyperscaler.
So they're expanding their customer base even further.
Yeah, and this new program is expected to start production sometime in calendar year 2026. And they described it as a multi-generational engagement. So it's not just a one-off deal, it's a long-term strategic partnership.
So they're really embedding themselves in these customers' technology roadmaps, becoming an integral part of their future plans.
Exactly. And to support all of this cutting-edge stuff, all these advanced designs, Marvell is making some big ongoing investments in the underlying technology.
So they're not just resting on their laurels, they're continuing to innovate and push the boundaries.
Exactly, yeah. They're working with the most advanced process nodes in chip manufacturing. They're developing high-speed SerDes, which is the technology for communication between chips. They're working on new interconnect technologies, memory solutions like custom HBM, high bandwidth memory.
Yeah, that's essential for AI. You need to have the memory bandwidth to keep up with those powerful processors.
Right. And they're also pushing the limits of packaging technology, how you actually put all those chips together. And of course, they're investing heavily in silicon photonics, which we talked about earlier with those electro-optics solutions. And to kind of show off their capabilities, they even announced that they demonstrated the industry's very first 2-nanometer silicon IP.
2 nanometer, wow, that's the bleeding edge.
Yeah, it's really a glimpse into the future of even smaller, faster, and more power-efficient chips.
So they're setting themselves up to be a leader in that next generation of technology. Okay, so let's shift gears a bit now and look ahead. What's the outlook like for Marvell across its different markets? What are they expecting for the first quarter of fiscal year 2026?
Sure. So in their core data center market, they're forecasting sequential growth in the mid-single-digit percentage range. And breaking that down a bit, the cloud and AI segments within data center specifically are expected to deliver double-digit sequential growth, but that's being somewhat balanced out by a typical seasonal slowdown in the on-premise data center portion.
So AI continues to be a strong tailwind. What about some of their other markets, like enterprise networking, carrier infrastructure?
Yeah, so for enterprise networking and carrier infrastructure combined, they're anticipating aggregate sequential growth of about 10%. This shows that there's a continued recovery happening in those markets, although they did point out that their shipments are still a bit below actual end market consumption levels. So this suggests that there might be even more upside potential, as inventory levels kind of normalize across the industry.
So those more traditional networking markets are slowly but surely making a comeback. What about the consumer side of things? What's the outlook there?
Yeah, so for consumer, they're forecasting a pretty significant sequential decline of around 35%. And this is mainly due to, the normal seasonality after the holiday shopping season. And they're also seeing some decreased demand for gaming-related products. Looking further out, they expect their annual revenue in this consumer segment to stay around $300 million for the next few years.
So seasonality always plays a big role in consumer electronics. And then lastly, what about automotive and industrial, two areas that are seeing a lot of growth and innovation these days?
Yeah, so for automotive and industrial together, they're projecting a sequential decline in the high single-digit percentage range. Now, they are seeing continued growth within the automotive sector specifically, but that's being offset by an expected decrease in the industrial portion. And that's because, project timelines and order patterns in that industrial space can be a little bit more lumpy and unpredictable.
It's not as consistent as some of those other markets. Okay, so kind of summing it up, the near-term story seems to be continued strength in the data center, especially driven by cloud and AI. A recovery happening in enterprise and carrier networking, a seasonal dip in consumer, and kind of a mixed bag in automotive and industrial. So let's zoom out a bit now and talk about Marvell's overall strategy and their financial picture.
Sure. So throughout this past fiscal year, 2025, Marvell really scaled up their business. They significantly increased their annualized revenue run rate, and strategically, they've been actively shifting investments towards the data center market to capitalize on the huge opportunities presented by the AI boom.
It's going all in on AI.
Yeah, pretty much. And to support that, they actually did a whole organizational restructuring, creating a dedicated cloud data center group to focus specifically on those big hyperscale customers. And then they have their broader multi-market business group for their other segments.
So aligning their structure with their priorities. Makes sense. And how did all these strategic moves and these market dynamics translate into their overall financial performance for the full fiscal year 2025?
Well, they saw really strong revenue growth in the second half of the year. They improved their non-GAAP operating margin, meaning they became more efficient at turning revenue into profit. They achieved record operating cash flow, and they also increased capital returns to their stockholders, through things like share repurchases and dividend payments.
So a lot of positives for investors to take away. And just focusing in on that strong fourth quarter specifically, what were some of the highlights there?
Yeah, so we already talked about that impressive year-over-year and sequential revenue growth. They also had solid GAAP and non-GAAP gross margins, and they achieved significant sequential growth in their non-GAAP earnings per share. Their balance sheet and cash flow remain very healthy, and they even got an upgrade to an investment-grade credit rating from a major agency.
Yeah, that credit rating upgrade is a big deal. That's a real vote of confidence from the financial world. And what about specific financial guidance for the first quarter of fiscal year 2026? Did they provide any details there?
Yeah, they did. So, along with that revenue outlook we talked about earlier, they also gave detailed expectations for their GAAP and non-GAAP growth and operating margins, other income and expenses, their expected tax rate, and their share count. And really importantly, they emphasized that they're committed to continuing to drive strong operating leverage and moving towards that long-term non-GAAP operating margin target of 38% to 40%. And they also reiterated their focus on generating strong cash flow and returning capital to shareholders.
Sounds like they're managing the business well and keeping investors happy. All right, now earnings calls often have a Q&A session with analysts, and sometimes those can reveal some really interesting insights that you might not get from the prepared remarks. So what were some of the key takeaways from that Q&A portion?
Well, one thing that stood out was their confidence in their continued growth with their main XPU customer, the one they're providing those custom chips to. They said they expect that relationship to keep growing well into fiscal year 2027 and beyond. And that's based on the current high-volume production and the anticipated ramp-up of the next generation of products. They also clarified that AI-related revenue now makes up the majority of their total data center revenue. So those electro-optics and custom silicon solutions, those are playing a big part in that.
So AI is really the heart of their data center business now. What else caught your ear in that Q&A?
Well, they mentioned that they now have custom silicon engagements with all four of the major hyperscale cloud providers. Specifically, two of those are in the compute space, with a third potentially on the way. And they have one in networking, which is a custom NIC program. And they talked about how those custom silicon opportunities are really sticky. Because, it's not like buying off the shelf components. These are very deep, very integrated, highly complex designs that require a lot of manufacturing scale and a very flexible business model to support them. And they believe that their capabilities in these areas give them a big advantage.
Yeah, that stickiness is a good thing, right?
Right.
It means there's a certain level of customer loyalty and recurring revenue potential.
Exactly. And they also pointed out how their networking products are proving to be really complementary to their custom compute efforts. So it's kind of a 1-2 punch. Looking further out, they see co-packaged optics as more of a long-term opportunity, mainly for scaling up performance in AI and for in-rack connectivity within data centers. But they are investing heavily in that area. And they also mentioned they're exploring LPO, linear pluggable optics, for similar applications.
So they got their eyes on multiple paths forward.
Right, for both the near term and the long term. They're not putting all their eggs in one basket. And speaking of their more established products, they said that the market for their 800 gigabit per second electro-optics is still going strong, and they're seeing the beginning of a transition to 1.6 terabit per second speeds. And they feel well positioned to capitalize on that transition with both their current 5 nanometer and their upcoming 3 nanometer 1.6T DSP solutions. They also mentioned that they've been intentionally increasing their inventory levels to support the expected ramp up in both their custom and optics businesses.
So they're getting ahead of the curve, making sure they have the supply to meet that demand. Now, zooming out to the bigger picture, what's their long-term vision for their position in the data center market?
Well, they reaffirmed their goal of achieving a 20% market share in the data center semiconductor market by the year 2028. And based on their current growth rates, they actually think they're on track to exceed that target. They also suggested that the overall total addressable market for data center chips might be even bigger than they previously thought. And lastly, they highlighted that the need for high-speed scale-up connectivity in AI, that represents a whole additional market opportunity for them. So they're working on programs in optical, co-packaged, and even advanced copper solutions to address that.
So it's a pretty optimistic outlook, lots of growth potential, and they seem to be executing well on their strategy. All right, well, that was a great breakdown. But now it's time for our favorite segment where we put on our speculative hats. This is not financial advice. So let's hear an outrageous but plausible trade idea based on everything we've just discussed.
All right, so given how strong Marvell is in that custom AI silicon space and how essential high bandwidth memory is to feed those powerful chips, here's a thought. Consider a long position in Marvell paired with a long position in one of the leading HBM high bandwidth memory manufacturers that is known to be a close partner or supplier to Marvell. So you're basically betting on the synergy between that advanced processing logic that Marvell designs and that specialized high-speed memory that's absolutely crucial for performance in AI accelerators. Now, the outrageous part here is that you're really making a concentrated bet on the success and the close collaboration of these two specific companies within a very dynamic dynamic and competitive AI hardware landscape.
Interesting. So a play on that interconnectedness, that reliance on each other. What's another potentially eyebrow-raising idea?
All right, how about this? Considering that shift we talked about towards custom networking in the data center, you could consider a pairs trade. Go long on Marvell, benefiting from those custom NIC and CXL memory solution wins, but at the same time, short a more traditional, well-established networking vendor that might be perceived as being slower to adapt to this whole trend of hyperscaler-driven customization. So you're essentially betting that the future of data center networking is going to be much more tailored, much more customized, potentially at the expense of those more generic off-the-shelf solutions. Now, the outrageous aspect here is that you're betting against some potentially very big, well-established players in a market that's going through a pretty significant architectural evolution.
Yeah, definitely a contrarian bet. But hey, sometimes those are the ones that pay off big. All right, well, as always, folks, these are just purely speculative ideas meant to be thought-provoking. Please don't take them as actual investment advice. Make sure you do your own thorough research before making any decisions with your hard-earned money.
Couldn't agree more.
All right, well, that wraps up our deep dive into Marvell Technology's Q4 2025 earnings call. We've covered their financials, their strategy, and some potential implications for investors. We encourage you to dig in even deeper. Check out their reports, look at the broader industry trends. What do you think about Marvell's approach to custom silicon? What about their prospects in this rapidly evolving world of AI infrastructure? We'd love to hear your thoughts. Join the conversation and share your insights. Thanks for tuning in to Talk Ticker. Stay informed, stay ahead.